Thank you for always tuning into the Stock Market Update. Today, we are here to bring you the latest stock market news on this 18th day of November, 2023. Stay tuned. Shares of Expedia Group Incorporated, EXPE, are on the rise, with the stock price climbing to $136.78, marking a 5.36% gain. This increase follows an upgrade in investment rating from hold to buy by an analyst, who also lifted the target stock price from $135 to $200. The analyst has underscored that Expedia is at a key inflection point where its revenue growth will pick up speed, and EBITDA margins will widen by the year 2024. It's also predicted that the demand for leisure travel worldwide will maintain modest resilience in 2024. Expedia, as an influential player in the online travel service industry, provides a broad spectrum of travel-related services. These services include booking for airline tickets, car rentals, cruises, vacation packages, hotel reservations, and many more. Operating globally, it is recognized for its range of brands, featuring Expedia.com, Hotels.com, Hotwire.com, and others. In light of the recent positive outlook, the company is well positioned to leverage the anticipation of steady travel demand in the next few years. Shares of Ford Motor Company, F, observed an uptrend, with the share price rising to $10.28, marking an increase of 1.22%. This upward shift followed the ratification of a tentative deal by the company's union members, thereby concluding the labor contract discussions taking place between Ford and the UAW, United Auto Workers. Out of an approximate 35,000 Ford union members who participated in the voting, 68.2% lent their support to the agreement. The newly ratified consensus includes a wage increase of more than 25%, reinstatement of the cost of living adjustments, and other economic improvements. According to the union, this agreement's enhancements are assessed to be more than 4 times the benefits offered by the 2019 agreement. It is projected to result in a basic wage rise that outstrips the wages union members have earned over the past 22 years. From the perspective of investors, this agreement illustrates the upper limit of the projected rise in labor costs. The CFO of Ford had previously stated that if UAW's contract was approved by its union members, it would lead to an increase in the cost per car ranging from $850 to $900. The CFO further stated that in order to offset these additional costs and to reach the profit target announced earlier, Ford would strive to uncover productivity, efficiency, and cost reductions across the company. Amazon, ticker symbol AMZN, currently trading at $144.33, marking a 1.05% increase, revealed plans to lay off several hundred employees within its unit that oversees the voice-activated assistant Alexa. The announcement came via a letter distributed to the company's employees. David Limp, the vice president who heads the teams responsible for both Alexa and the media streaming device Fire TV, stated that Amazon is shifting some of our efforts to align with our evolving priorities. The result of this shift, Limp noted, will lead to certain initiatives being discontinued and a reduction in the workforce. However, Limp stopped short of mentioning exactly which projects will be affected by this move. Limp underscored Amazon's continued focus on fields such as generative AI. Though the specifics of its revised strategy remain unclear, this development indicates a reshuffling of resources at Amazon as the company adjusts its strategic focus to ensure alignment with broader business objectives. With the global electronics market becoming increasingly saturated with voice-activated assistants and streaming devices, Amazon appears to be making moves to ensure it stays ahead of the curve. As such, investors and industry observers will be watching closely to see how these changes impact Amazon's competitiveness. IT service company, Globant, GLOB, has seen a surge in its stock, with its price rising to $202.76 or a 10.74% increase. This upward trend follows the company's release of its third quarter earnings. Although the revenue came within the expected range, the company's earnings per share, EPS, overtook the predicted figures. Globant also issued its guidance, preserving its full-year forecast, which shows both EPS and revenue surpassing market expectations. In particular, a notable influence behind this positive development is a significant 8% increment in sales procured from its biggest customer, Disney, DIS, relative to the preceding quarter. Looking ahead, Globant predicts an EPS of over $1.60 and maintains a revenue outlook of over $579 million for the fourth quarter. For the full year, Globant maintains a steady projection of an EPS of over $5.72 and revenue of over $2.09 billion. Globant specializes in offering digital technology services that support the lifecycle model of organizations. The company primarily caters to North American corporations, helping them optimize their business operations with AI technology to facilitate seamless connections between customers, consumers, and employees. Shares of Academy Sports and Outdoors, ASO, saw an upswing, with the stock price advancing to $49.38, marking a 3.37% gain. Analysts initiated coverage on the stock with a buy rating, setting the target price at $57, a figure 20% higher than the prior day's close. The analysts pointed out that the durability of the company's operating profit margin seems to be underestimated in the market. They are confident that the company's string of solid performance should be sufficient to lift market sentiment and lay the foundation for a potential stock price rebound. On the company profile front, Academy Sports and Outdoors employs an omni-channel strategy that enhances shopping convenience. Customers can purchase products online and collect them in-store. This strategy has empowered the company to sell a wide range of sports and outdoor recreational equipment to a broad spectrum of consumers. Academy Sports and Outdoors' product portfolio is vast, encompassing national brand and in-house brand apparel, footwear, fitness equipment, fishing accessories, tents, bicycles, and more. Armed with this commerce strategy and diverse product selection, Academy Sports and Outdoors is positioned to cater to a broad swath of consumer needs and preferences. Shares of Gap Incorporated, GPS, surged by an impressive 30.91%, closing at $17.90 on the market. Following the announcement of its Q3 earnings, for the period August to October, the major apparel retail company witnessed a less than predicted decline in same-store sales. Particularly worth noting was the performance of its flagship brand, Old Navy, which reported a low but above expectations growth in revenue, compensating for decreases by Banana Republic and Athleta. Earnings per share likewise outdid anticipated figures by a considerable margin. In demonstrating an admirable adjustment to the current market realities, Gap Incorporated upheld its original estimate of a mid-single-digit decline for year-long sales. On the brighter side, it recorded a year-on-year increase in gross margin rate, surpassing prior forecasts due to factors including an efficacious merchandise strategy, decreased air freight expenses, favorable merchandise contracts, and reduced promotional activities. Evident in these findings was the early success made by CEO Sonia Syngal in her attempts at improving the company's performance. On a final note, the release of the earnings report boosted anticipation amongst analysts concerning a prospect of additional growth in the company's stock's value. Shares of Applied Materials, AMAT, have taken a downturn, falling to $147.59, marking a 4.66% decrease despite announcing better than expected results for Q4, October 2021. Both earnings per share, which stood at $2.12, beating estimates of $1.99, and revenue, which reached $67.2 billion, surpassing the anticipated $65.4 billion, outperformed the market forecasts. Its sectors also experienced growth, with semiconductor systems reporting $48.8 billion, global services at $14.7 billion, and display and adjacent markets at $2.98 billion in revenue, all exceeding expected figures. Furthermore, the company's first quarter guidance shows promise with expected earnings per share ranging from $1.72 to $2.08, and a revenue of approximately $64.7 billion, beating the estimated $63.4 billion. Despite these positive returns, AMAT stock value experienced a decline. The drop comes amidst recent news of a U.S. investigation that Applied Materials may have violated export laws concerning trade with China. As reported by Reuters, the company is alleged to have sold machinery, worth hundreds of millions of dollars, to Semiconductor Manufacturing International Corp., SMIC, China's largest chip maker, without obtaining the necessary permissions. Applied Materials had initially disclosed in October 2022 about receiving a subpoena from the U.S. Attorney's Office in Massachusetts asking for information about shipments to some of its clients in China. The company reaffirms its commitment to cooperate with the government and comply diligently with global laws that include export controls and trade regulations. Please don't forget to like, subscribe, and share. Your support means a lot to us. If there's any information you'd like us to cover, feel free to leave a comment below.